From the headlines that move us
to the plays on the field and the people making a difference.
It's news, sports, and people that make our community come alive.
This is the heartbeat of Tampa Bay.
I'm Christopher Ingram.
And I'm Bridget Bello.
Bridget?
Yes.
You're back here in the saddle for Sarina
I am.
again. Thank
Where
you
is
so
Sarina
much.
now?
She's in Miami, but she's coming back, and we've got the beautiful hearts, which...
I'm starting to think you're lying to me.
No, she's coming back.
Are you sure?
She's coming back.
You didn't make her
You want me
back.
to put you on the payroll, though?
Yeah.
We got to do a shout out to Julie Schaefer.
Yes, with AdSharp.
AdSharp Web Design, who does all of our graphics, and she did the awesome falling hearts with the one green one for Sarina, and she's just going to love that when she's here next week.
That's it. Julie does amazing work. I've worked with her for many, many, many years.
She really does. I know of her because of you. You referred her to me.
That's how it's supposed to work, Chris.
Okay, enough about that.
Okay.
We have a wonderful guest that you brought.
We do have a wonderful guest that I brought. She's one of my best friends, and she actually has a day job and just proves she can count to 10. So I think she qualifies to be on the show, right?
Yes.
This is Brooke Mirenda. She is the president and CEO of SEDCO, which is the Sunshine State Economic Development Corporation.
Correct.
And super sexy topic. It's small business loans, SBA loans. Can't wait to dive into this. But there was some big news this week in the SBA world. And so why don't we start with, before you launch into the big news and kind of what that means, just tell everyone a little bit about SEDCO and what you do and why it exists.
Sure. So SEDCO is a company. I say we're a lender on behalf of the SBA, the U.S. Small Business Administration. So when borrowers apply for loans, what happens with SBA financing is there's appropriations, there's funds put aside for these loans. And right now, thankfully, our loan program operates on a zero subsidy. So the SBA 504, meaning taxpayers aren't paying for the loan program, even though the money's set aside. So we're very diligent in who we're financing and things like that. There's also other SBA programs out there, and it can get very confusing. Yeah. You had mentioned how you just you purchased everything here, so you can get certain financing that can be SBA or non-SBA, and just having people that understand the differences and what's best for a small business owner, an entrepreneur, is really vital to whether someone's going to sometimes be successful or not.
Right.
And so that's what our company does. I would say we're a lender on behalf of the SBA because we're like, oh, we're a nonprofit. Yeah, that doesn't matter. It's more of just private nonprofit's very different. But that's what we do. We essentially are a conduit for one particular loan program with the SBA, and that's the relationship. So you can't do this type of deal without a company like SEDCO.
So Brooke, who are your typical clients? What is their size? What industries do you see?
All of them and all of them. So some people think SBA like so small, and I've had someone say, well, they have $100 million in gross revenue. Well, that's okay. It's a matter of their net income. What are they doing? What are they purchasing? What is going to be the use of proceeds? So when they sit down and get a loan, where are those checks being written and to whom and for what? So primarily, I can name a bunch of places around here that we have financed. I was mentioning the Tampa Snow Park. We did their equipment loan. We do restaurants, hotels, manufacturers. There's a big one here in Largo. He manufactures, I think it's like 60% of the 9mm bullets, things that you wouldn't even necessarily know. So, and everything in between. And there are some rules that have happened recently, which we'll get into with SBA. But effectively, it's funny because I'm like, how many people qualify? Well, if you're owner-occupied commercial real estate, so you're buying real estate, that's what primarily this program is. There's other SBA programs where you can do a business acquisition. You can just buy, small, whatever it's like equipment, things like that for a different SBA loan. But ours is mainly commercial real estate. So I could name Delos's Pizza down in Johns Pass. We did a refinance for him. I'm always typically talking about food. I don't know why, but and then we do a lot of ground up construction. So a lot of businesses who are buying land and building a building to operate their business out of, that's what we finance. SBA is not in the business of investments, meaning you want to build a building and lease it out to a bunch of different business owners. Who's repaying the debt? If it's all those other business owners, that's not the business they're in. They're in the business of owner-occupied, funding businesses for the purposes of their operation.
Okay.
Yeah.
And so it's hard to understand, right? As somebody that kind of went through the process with you, has known you for a really long time. I feel like I'm just now starting to grasp really what the difference is. So if I said, I'm going to buy a business, I'm going to call my banker, I'm going to tell him I would like a small business loan. When am I going to get sent to you as opposed to the banker actually taking hold of that loan?
So one thing you said is, I'm going to buy a business. So what are you buying? Are you buying the business? You're a CPA firm, you're buying the book of business. There's no tangible asset to that.
Right.
If that's the case, you would go with what's called a 7A loan. So a 7A loan is, I call it the umbrella loan. It can finance business acquisition, what you're talking about, something like that. It can do real estate and everything else. I say it can, finance your firstborn if you want it to. Whereas the 504, if you were like, hey, I'm going to buy this CPA firm, we'll use that as an example, and I'm going to buy the book of business, but I'm also going to buy the building they're in, and they've got 12 employees, right? Now you could do a 7A for the business acquisition piece, whatever value is tied to that, and then the real estate is a 504. So you can sit at the closing table and do a 7A and a 504.
So what are the advantages to a 504 over a 7A?
So most 7A loans are tied to prime, and it's a variable rate. So a year and a half ago, prime went up over 5% in like 13 months. So if you think about your interest rate going up that quickly, especially if you're a startup, you've not been generating revenue all that long, your cash flow gets really tight in a situation like that. So most lenders that are doing 7A are on a variable rate, and that's the biggest thing. You talk about prime plus. When our rate just came out today, it's 5.8 fixed for 25 years.
Wow. That's a huge difference
Yeah.
from prime plus, right?
Right, exactly.
And
so
is
that's
that to drive people to be in owner-occupied commercial real estate space? Like, is that the reasoning behind the differences?
No, the main reason is the 7A and the 504 have different purposes from the government perspective, from the SBA perspective. 7A is a credit elsewhere. You can't get credit elsewhere, especially for a business acquisition. It's tough for a bank to say, I'm going to give you $500,000, $750,000 on a book of business when there's nothing tangible, there's no collateral, there's nothing to support that. So that the 7A is the credit elsewhere, whereas the 504 is the economic development, that's why SEDCO, the economic development program through the SBA, through the creation of jobs. So the goal and the perspective is less money down, long-term fixed rates for our small business owners to not have to put as much money into their building to then hire people. Because we have to get a job count. After 2 years of funding a loan, we ask them how many jobs do they have and how many jobs did they create. And we keep track of that, and the SBA keeps track of that as well. So it's their job creation loan.
She's actually testified in front of Congress over this stuff, right? She's not just a pretty face in Tampa
else?
Bay. She knows what she's talking about. It's pretty
Thanks.
impressive.
Yeah.
It seems like you definitely know what you're doing. So what is the biggest difference that a potential borrower might need to know but doesn't know about SBA loans versus traditional bank loans for business?
So back in the day, SBA used to be, the lender of last resort. You feel like, I have to go SBA, right? And ever since PPP, when PPP came out, if you remember the Paycheck Protection Program, holy cow. Ever since then, I think SBA has been elevated in a sense where even the most affluent clients are like, how do I get into this? How do I get into 5.8 fixed for 25 years? Because even commercial loans aren't that low. Right. So it's very different, and it's a matter of, usually they go to their bank, just like you had mentioned. They go to their bank, and their banker typically knows, hey, here are the different loan programs. And to your point, you were talking about the difference. Well, commercial banks are a little more credit sensitive. They're, you know what I mean? There's, do you have collateral? What are all the things to ensure that there's repayment ability?
Get their money back.
Yeah, but exactly. But SBA, I mean, the reason it's valuable is on the 7A, for example, 75% is guaranteed by the government. So if they do $1 million, to put an example, you do $1 million conventional loan for the same thing, a CPA firm, and it's just a business acquisition. Well, you have $1 million and maybe you have a lien on a house or something. You can't really do anything until the house sells. So you just lien it, and that goes south. That lender loses $1 million day one, right? With 7A, as long as you do the right things that you're supposed to do, you underwrite it the right way, and that loan goes bad day one, $750,000, 75% of that loan is guaranteed. So the lender's only on the hook for $250,000 on a $1 million loan. That is where the rubber meets the road when it comes to conventional versus whether you're going to go SBA. And it's really the credit worthiness and also what the borrower needs and wants and what the purpose is.
Well, I was going to actually talk about credit worthiness. Could someone that doesn't have really good personal credit, maybe has a bankruptcy either personally or with a private business that they own, can they still get money in an SBA program?
They can, yes. I always say disclose. Just let us know. They even ask if there's ever any, if there even prior arrests, anything that we're just like, tell us. It's not a problem. It's just disclose it to us. Yeah. Now, bankruptcy 2 years ago, that's going to be tougher. 5-7 years ago. And what was the purpose of bankruptcy? Right. We see a lot of bankruptcy where it's someone got sick and it's a lot of medical. Oh, yeah. They didn't go, spend a bunch of money on credit cards and then now they're back in the same position. Yeah. That's where working with the lender that can really dissect that and explain it is really important to be able to move those types of business owners forward. Right. So yeah, credit score matters. Credit does matter, but it's the why. Maybe someone's credit score is really low because they have all this outstanding credit, meaning because if anyone tells you no one knows how they determine what a credit score is going to be.
It doesn't make any sense.
Nobody knows.
If you pay off a credit card, your score goes down. Yeah. Go figure.
I literally got the Amex card and my score went down over 100 points. That's
crazy.
It's crazy. Yeah. So who knows how that really works? But when you're looking at that, you go, okay, what's the reason why? Okay, there was a 90-day late 6 years ago. Well, you know what I mean? We can mitigate that. Right. It's not, we're digging into it. So it's different.
So this administration has kept lots of organizations on their toes with its changes over the past several months. I guess, 14 now, huh? Right. And there's been some big changes to the SBA loan programs. You want to talk about kind of the progression of that? Because I know a big one just happened this week, but you kind of have to understand what happened prior, right? Sure.
So we were just talking about what makes you eligible or maybe ineligible for an SBA loan. So back in January, it was 51% of an ownership. So say you guys own, and you're.
I get 51.
And
I get 51.
And you're 51, and you're 49. Okay. You at least have to be a U.S. citizen, a U.S. national, or a legal permanent resident in order for us to be able to move forward. 49% can be owned by
anyone.
Right.
Even Bridget.
Correct. even this one.
I think that makes sense, though. To me, that makes sense, right? If you're
right. 51%.
For
well, this administration flipped to 100 now, so 100% in that same category. That is problematic. The reason it's problematic is we've got business owners that the daughter owns 95%, her dad in Ireland owns 5%. She's now ineligible. You know what I mean? So you can give examples as to why that big swing wasn't great. Yeah. Understanding the majority you want to be U.S. of course, because this is U.S. dollars, being appropriated, so that makes sense. But then so it was 100, went to it was 51%. Now it's 100. Worse. Then in mid-December, it went to 95.5. So it meant you can have 1 or 2, 3% owners, up to 5% of non-U.S. citizens that own your business. Still not great. And then this past week, it came out that as of March 1st, no legal permanent residents. The reason that's very different, as I just mentioned, it was 51, which included LPRs. 100% included LPRs. Now they're completely getting rid of legal permanent resident, legal permanent resident alien, a green card.
So they can't be part of it.
So they can no longer, unless, we're sending stuff to Congress like tomorrow. So unless it can be changed, that's the kind of the moving and the shaking of what's happening.
What's the rationale behind that?
I don't know. I can share my opinion.
You don't want to get in trouble. Let's not get her in trouble, Bridget.
It's fine. I can share my opinion. So, obviously there's been things in the news, as we know, all the deportations, all of that happening. Legal permanent residents can be deported. U.S. nationals, U.S. citizens cannot. So I think 1. 2, I also don't think we have any jurisdiction if an LPR were to leave the country. I don't know that we have any jurisdiction to grab them back. Correct. And so they've just tightened up saying, well, now no LPRs, because there are a lot of folks in this country that get SBA financing that have a portion that are LPR, meaning if they're 25%, now they're completely ineligible. You can imagine they were included even in the 51%, the 100%, and to just completely eliminate them we were all like, what? So we're working through that right now.
Is this all through congressional action, or is it a rulemaking process?
A rulemaking.
It is,
so those are two different things.
Yeah.
Good job. You know what I'm talking. Yeah. So so there's when people say it takes an act of Congress, I've seen that actually play out, which is really cool. But this is us going, hey, someone at SBA is making, changes that are going to really adversely affect this program and affect the types of people that can get it, especially in Florida. I mean, the Miami area, big, where you've got a lot of LPRs there. They're legal. They're just not U.S. citizens or nationals.
I mean, wearing my political hat, I can understand why the Trump administration is doing that. But just because something is a good idea on paper doesn't mean it's a good idea in practice.
Right.
Well, so what I'm trying, okay, does this only apply, we're all being very careful what we say. Does this only apply to somebody who's currently applying, or is it retro?
No, it can't be. They can't do that. So anything, this is how they've always done it, but again, anything is on the table sometimes. So in the past, anything that's approved, and it says it has to be approved before March 1st. So any loan that's in process right now that's approved, or up till February 28th, would be approved under the current, what they call the SOP. That procedural notice that is effective March 1st. If there's an applicant that's in that hasn't been approved yet, and they have if there's any LPR loan, it would get declined. So they're not going to go retro. They'll go back to whatever that loan was approved under, what SOP, under what operating procedure it was approved under. Okay. So all the loans that we've had in the past that have LPRs, but it's a big deal. It
seems like a big deal,
right?
And I mean, I'm all about legal immigration and people being here, but we're also a melting pot, and we have people that come here and add all kinds of flavor. Absolutely. I mean, we go back to the restaurant conversation we were having earlier, right? Of we have a friend that has a place at the beach that we wouldn't love the food there if it weren't for him, right? And so you just think about, what is that going to do to us from a homogenizing perspective?
Ability for people to get credit.
If we accepted them into this country as legal permanent residents, then why wouldn't we allow them to open a business? And
you want to go up to
that?
DC and talk to Trump about it?
I mean, I've been known to do crazy things. So sure.
Yeah. I mean, we'll see. I mean, I think if it doesn't, some of these things just it got pulled back, it was 100%, and they went to 95, and then they did this, and we were like, wait, hold on. Whoa. And then we were reading the rulemaking going, yeah, that's what it says. But you're right. What we're doing right now, we had mentioned job creation, how the 504. Yeah. So I'm the regional director for our trade organization for our region. And so I've asked the whole region to send me all their jobs reports for this fiscal year. So we're sending that information to Congress saying, hey, here are all the jobs that have been created and or retained through our program just this year by LPRs.
Yeah, smart.
Just
show them the numbers.
Show them the numbers, because the numbers, that's what I like about math. It doesn't lie. It never lies.
I mean, is there any kind of data out there that shows that people who are non-permanent U.S. residents and citizens, that they default at a greater level or running away with taxpayer dollars? Or is this just all just political showmanship?
Yeah, it's funny you should ask that. So there's been, right now, the 7A program is operating at a subsidy which is different. So that program I was talking about before. And so what does that mean? Well, they're probably looking into that program, the 7A program, and going, okay, were there a lot of LPRs? What happened? You see that guy that did all the daycares up north or whatever?
Yeah,
I'm just saying, did they get SBA fine? You know what I mean? Those are the things that, and again, it can be a knee jerk and they make a swing. But with our program, I didn't talk about this, but the 504 program it's a partnership with a lender. So a lot of our deals are with a bank, Chase, Wells, Republic, Valley, you know what I mean? Flagship, you name the bank, it's alongside the lender. So there's not a lot of squirrely things, if you can do. Whereas with 7A, they can be done by what they call SBLCs, just a non-bank lender, doing these types of loan programs where it has that 75% guarantee. So it's very different. And I just wonder if the numbers, because they're on a subsidy, are there some things that we just don't necessarily have the numbers to justify why they're doing it.
Interesting.
Mm-hmm.
Super interesting, right?
Yeah.
It is. Money, money, money makes the world go around, right?
Let's make the world go round.
It does. That's true.
Well, Brooke,
Yeah.
tell us, do you have a website? How can people get in touch with you
Sure,
or learn
yeah.
more information about getting a SBA loan?
Sure. So our website is www.sedco504.com.
SEDCO?
SEDCO, Sunshine State Economic Development Corporation. People get confused because we're not an EDC. We are because we create jobs. Well, our business owners create jobs through the loan programs we offer. But yes, that's our website.
Very
And LinkedIn, I mean, people can find me. I thought,
Track 'em
unfortunately, hard to find. Yes.
Well,
So,
we appreciate you
thank
being
you so
here with
much.
us,
Yes,
Brooke.
thanks
It's
for having me. I
fantastic
appreciate
learning
it.
about this.
Yep.
It is super
Thanks.
interesting.
Yep.
Super sexy. You're wrong.
Another great guest. Good job, Bridget.
Thank you.
Every story shared,
Adds another heartbeat to Tampa Bay.
from courage to community.
We're proud to tell the stories that keep our neighborhoods strong.
Thanks for
Thanks
watching.
for watching The Heartbeat of Tampa Bay.
You're a little slow that time.
Shut up.